We want to get to the bottom of this, perhaps sluggishness that you're seeing in exits, but sheer scale and force of money coming into VC. Is there a bubble? Is there a bottleneck that's growing here?
Well, I think when we look at the data, now that we've had the fourth quarter data compiled, now that we're looking at the full 2016, there are three key takeaways, as you mentioned. Number one, you had the investment pare back. What we hear from our members, it was more of a normalization back to more rational levels. Certainly a lot less than what we saw in 2015, but as your graphics show, 2015 was really a peak over the last decade or more. And when we look at the amount of money that was raised by VC funds, we have optimistic view of the future that entrepreneurs are going to have an opportunity to get investments, to get the capital they need to start and grow great companies. As you pointed out, the IPOs is where we really need the help. And hopefully here in Washington, we can do what we need to do to make changes so that there are more IPOs.
What changes are needed?
Well, the Jobs Act that was passed a couple of years ago, I think was a great step. It had things like the confidential filing and testing the waters provisions, and we hear from startups that that's been very important to them. I think we need to sit down, frankly, with others that are a part of this ecosystem and figure out what the next best steps would be. We don't pretend to have all the answers, but we are committed to working with, whether it's the exchanges, whether it's the investment banks. It's too important to, frankly, the economy of the U.S. to make sure that startups have another option for an exit, not just a merger or an acquisition, but an opportunity to go onto the public markets.
I mean, within your report, Bobby, you mentioned that perhaps some of the valuations of these startups are worrying as to whether they'll be achievable in the public market. Can you name which sort of companies you're worried about? Are you flagging the likes of Snap, which many are looking on for the first quarter of 2017?
Well, I won't talk about individual companies, the portfolios of our members. What I would say is that it is important that we have great experience for these companies that are going out. As you know, a lot of people in the pipeline sitting on the sidelines will be watching to see if it's a positive experience for these first ones that go out the door and go onto the public markets. And I think that'll be important. The good news is there's a fairly healthy pipeline, and there's a lot of optimism from our members that we could see more IPOs this year certainly than we saw this past year.
Talking about the funding for the startups pre-IPO, you say that perhaps they're coming back down to more rational levels. Is there an element that some of the startups are wanting too high valuations at that point as well? Are VCs not finding the balance there, or is there not as many good companies to be getting into that slowed the pace down slightly?
Well, there's probably a bit of a correlation with the high fundraising numbers. If your firm's out raising a fund, you might have less time to spend looking at a lot of first financings. And when you look at those first financings and you see that that number is down, I think it's part of the larger story. I think you've had several venture firms that say, look, we're happy to take our time. We're glad to see some of the valuations come down a little bit. We can get back to the way we are more comfortable doing business, take our time, do our due diligence, make sure we're making the right investments for our LPs and backing the best companies that we can.
$42 billion pouring into venture funds. Will that slow in 2017 if other assets are doing well? And is there a worry that it's been consolidated in too few hands?
Well, we've certainly seen over the last few years that some of the bigger firms are raising bigger funds. Our report shows that 7 funds were raised at $1 billion and more, and that's a lot bigger than historical venture capital numbers. But I think you continue to see changes in the venture industry. You continue to see bigger firms bring new and different service models to the ecosystem. And so they're going to learn new ways to deploy the capital to the right entrepreneurs to make successful businesses. We also see changes with more micro VCs coming on board and making really institutional seed investing more of its own specialized asset class within venture.